Probably helped if we had some sound. What's up, all you sexy degenerates? Just out here trying to make some money on the grind. If you could hit that like button, subscribe, share this. Share it with a brother, a sister, a cousin, a mother, someone that might be in need, somebody that might want to get a little education and find something else that they can do with their time. Maybe help someone save some money. And we have sound. I know. It was my phone. Huge day, kinda. We had a great day in chat. I took some profits off our TLT trade from 2 days ago or yesterday. I'm pretty sure it was Monday I got in. Amazon. We actually shorted Amazon, which is, why would you short Amazon? It just went nuts. It did go nuts. And I was actually just going back and looking at the chart, and Amazon is absolutely wicked. I think there might be a reversal, though. I really do. I don't know if I can trust that move. Don't get me wrong, man. I do not want to step in front of that thing. Amazon had a crazy move. We're going to get into that. Netflix, Starbucks, CPI, news around the markets. So I had to make an appointment for tomorrow. I got the appointment for 5:30. 5:30 tomorrow to take my little girl to the vet. They were a little too packed. So I did get her some medication. I thank you guys for asking about her and stuff. I appreciate you. It's my girl. So what are we going to get into? We're going to get into some charts. We're just going to go right into it and cover the game plan. We're going to talk about what happened with CPI today and talk about the data that we have tomorrow that's going to cause the markets, what I think, really give us a good move, right? We still have a lot of things for next week as well, so buckle up, all right? We trade live right here on YouTube Monday through Friday, 6:30 or 7:30, sometimes 6:30, 7 o'clock to 4 o'clock. So come join us. Join us in the morning. We come in with our game plan, and we get ready for the day, right? We go over the news. We talk about where do we want to be? Where is liquidity? And how do we position ourselves, right? Are we long? Are we short? Are we putting on a couple different trades? Okay, I think tomorrow's going to be one of those days. We got some news, right? CEOs are stepping down. Another one's the other company, Netflix, is trying to, is just talking about how hard or how slow it's going to take for this new business venture that they're going down with advertising. So all I ask is that you guys remember, I said, if we can get some decent likes on here and some new subscribers, that I'd like to do something really nice for you guys. And to the day ones, I really appreciate you guys. My goal here is to help you guys manage your risk. Let's get that straight. First and foremost, we manage our risk. Then we worry about what it is that we're going to short and be long. And knowing that positioning ourselves and sometimes being patient is what it takes. There's always something moving in the market. At least this market cycle, there is movement and everywhere. You can always take advantage of something. You can always scalp something. And I don't just mean a few seconds, right? Don't get scalp mixed up with just, oh, you're in and you're out. You're in and you're out. No, you're just catching a move. It could take 20 minutes. It could take 10 minutes, right? A scalp could also be 5 minutes, a minute, 2, 3, 4 minutes. In my book, right? Now, if you get over like a half hour, 20 minutes, you're pretty much in a trade, right? But managing risk. What is the definition of managing risk to you? Ask yourself that question. If you guys also, real quick, if you guys have any tickers you want to go over, any questions you want to ask me, throw them in the chat. If you could be so kind as to hit that like button, subscribe. All right, I see you. You're looking beautiful. You really are. You got good things coming to you, right? So risk management, to me, I probably take risk management a little bit different than others, right? I still manage my risk when I'm in winning trades and losing trades. Haven't had listen, I am better at losing than I am winning, and that's how you should focus on being, or you should think about being that way, because that way I am able to control my losses, and I can control my losses to the point where they're smaller than my winners. Mathematically, that's the only way you're going to do this. If you lose less than you make when you're right. Okay? Sometimes, you know, the weird things happen. I get it. You know, news comes out of nowhere. That's why, you know, you don't need it, but you know, you need to be ready for it, and you need to at least have a trailed stop, something to save you, whether it's from the news or something to help save you from yourself, more importantly, right? So you don't do something stupid. The worst thing you could do is have a winning trade go red. Amazon, we went short. Thank God we managed risk, because you could have had some people right now really upset that they had a 50%, 60, 80% gain, and then the trade went red, really red, if you didn't stop out, right? That thing blasted off. And I said it in chat. We're going to go over the charts, and we're going to go into like Amazon and stuff, because when you know, you need to be able to identify, and if you don't read level 2 or time and sales, you know, you're doing yourself a disservice, right? You know, this is what I'm here for. I'm here to help actually give you guys valuable information, instead of clicking on a thumbnail that says how I made $10,000 in 2 minutes. How did I make $500 in 1 minute, 3 minutes? Right? The stock, I made $1 million in the stock market. I made $1 million in the stock market. Do you understand how you get fooled? And if somebody really made $1 million in the stock, which they do, people do. All right, so really dig into how did they make that million? Was it because of videos and promotions and whatever? They didn't make it trading. They didn't say, I made $1 million day trading stocks. Day trading, you know, the way that they word it could also mean something else. So don't get tied away from that. And I don't like it. And it's the same people in the industry that also say, oh, they got this person or they got that. Listen, I don't care if you're black, white, brown, yellow, purple, red, blue. I don't care if you're Asian, Mexican, Spanish, Japanese, all of them, Korean, American, Canadian, right? We can just go down the list, European, Australian. Guys, I just want you guys to be able to have something in your back pocket, a skill that you can pull out of your back pocket and use this to help grow your net worth, on top of obviously building a long-term portfolio if you don't have one, which most of you I'm sure do have one, which I would hope you guys do. All right, it's important to really understand the game. This is a long-term game. You want to take this with the rest of your life. You got to have the passion for it. You're going to have ups, you're going to have downs, but the downs, if you just follow the textbook managing risk appropriately, which I'm still going to get into that, you should not have big down days. I get it when you're new. You're going to have ups and downs because you're going to have market cycles. What's in front of you, you're not fully taking in. You're not fully taking in the rotation and what's really, really going on underneath the market, right? You're not understanding positioning or risk off and where is it. Right? Because for every time something gets bought or every time something goes up, there's something that comes down also. There's certain parts of the market where, you know, technology might be up like just 1%, but yet, you know, your Home Depots and your Boeings, they're up. They had a huge day. That's rotation, right? Healthcare got sold off and this went up. And, you know, there's not because of one, you know, one had the adverse effect on the other. It's just positioning has changed for future direction and future thoughts of what could be coming down the pipeline later on down the road, right? A lot of people, not a lot, but some didn't understand the idea, for instance, is why I was really heavy in energy. I was really heavy in energy because you're going to have, you know, you think about this. What's next, guys? All right, we're still in energy, still hot, right? I still think, I said it yesterday, I said it last week. I still think we get a pullback in energy. But understanding people being locked up in their homes, people not traveling, people not going to their offices, what's that going to do when things open up? You're going to have such a demand boost. That's why you wanted to be in energy before energy was doing what it was doing. Understanding those type of ideas, understanding when Mark Zuckerberg is on the earnings call and is talking nothing about Facebook, but is talking just meta, and there is nothing proven from Meta yet, and you have a business model that has brought itself to a big tech mega cap tech company, okay? And you're going to change the business model, and we don't know if that business model is going to work or not. But really, what is wrong with the original business model that you have to make a change? You saw the sell-off. If you were able to understand and read that, that the street did not like him talking about Meta, you could have caught in advance the following quarter coming up when they're spending all this money. That's something that hasn't proven, and if the original business model doesn't work, that means there's a problem. Who's to say that this new product is going to be able to match what Facebook did? So it sold off. If you start understanding these type of things, and this stuff takes time, right? This stuff really takes a lot of time to be able to really get good at this. And it's not just the buying, pushing the button at the right time and selling it at the right time, managing your risk, understanding the environment and the sentiment, right? So I'm here to help teach you guys. What did I say last night if you watched my video? Please, if you could, take the time to hit that like button, subscribe. You're looking beautiful right now. You really are. I see you. You don't think I see you? Nah, I see you. Seriously, I see you. So, the little girl's jumping up. She wants more food and stuff, but I'm going to get it for her. So, risk management to me is when I'm in a trade, and especially if I'm in a winning trade, I'm going to also manage my risk by taking pieces off as I'm getting that follow through, right? I'm understanding what is my goal with this trade. Is there news? Is there a technical setup, right? The liquidity. Let me close this door real quick. So with me being even in a green trade and me taking profits, you still need to manage your risk because of headline risk. And it is the nature. This is going to help keep you guys profitable and help grow your net worth by taking profits when you're right. You don't need to buy something and then hold it and then it goes 60. It goes 60% and then it just turns around and never comes back. And then you're kicking yourself in the ass because you didn't take profit. You just watched it go 60%. If I said to you, if I told you right now you could get 25%, would you get, when it got to 25%, would you take profit? You say, yeah, oh, hell yeah. Oh, hell yeah, I would. Why wouldn't I? I'd be stupid if I didn't. So, if you get 15%, 12%, why aren't you taking a piece off? If you get 35, 40%, your expectations need to come down. Unless you have a catalyst and you can read the chart and time in sales and level 2 to help you say, hey, this thing is going to go 10% today, if not 15, 20%. Big news behind it, technical setup. The candles are massive. The amount of buying with short selling, yeah, those type of days, those home runs, you still want to take pieces going up. But if you don't know how to identify those type of days to stay in the trade, have your targets, your support, your resistance, and understanding fully where is that pullback going to come in. If I'm in options, do I have enough time that pullback isn't going to take the majority of my profits away? Okay? Risk management to me is being able to take my money when I have it, once I get that nice good follow through, right? And a lot of it is understanding it in the moment. Time in the market is going to help you day after day, year after year. You're going to get better. You're going to be better than where you were after your first year when you get to 2 years. You're going to be better 5 years from now than where you were 2 years in. And you're going to look back and things will get easier if you follow the roadmap. If you follow the GPS, manage risk even when you're right, manage risk when you're wrong. Get good at losing. Take profits as you get them. If the trade is not working your way, stick to the stop loss. You want to give it a little bit of room, okay, but your stop loss needs to be wherever your money, the amount you're comfortable with losing, right? You have to stick to it, right? If you get a low vol, there are instances, but if you're new and if you're not able to somewhat if you can't read time and sales in level 2 and have a full understanding of what's really going on, stick to your stop loss, right? Stick to your stop loss. I managed my risk on a correct trade. I don't remember the percentages, but guess what? I had 2 green trades today. Still have another swing trade on. All right. Manage your risk. Get good at losing and get even better, or get better at losing. You just get good at losing. Get good at losing. All right. The whole point of this is to help you guys be able to, I don't know, do whatever it is that you want in life, right? Use that money that you get from trading and throw it and start buying, buy long-term stuff with it. Okay? You need to compound your money. You don't need to. You do whatever you want with your money. I'm not here to tell you what to do with your money. This is not financial advice. I just want what is best for you. And I don't want to come on here and give you guys garbage. Please, if you could, hit that like button. I'm watching you and I'm like, yo, this motherfucker has not hit that like button. Thank you for doing that. I appreciate you. Appreciate you. So, we're going to go into some charts. We're going to prepare for tomorrow. Let's talk about CPI real quick. You had a few bond auctions today. You had a 30-year mortgage rate. 30-year mortgage rate came out. I thought it was a bond auction. I know we had a bond auction today. Yeah, 30-year bond auction. I thought so. I didn't even see this on here, but I thought we had that today in 17-week bill. 5.33 for the 17-week bill. 5.335 previously. Slowly coming down. Canada's came down as well, a basis point it looks like. 30-year bond auction 4.125 versus a previous 4.189%. Came down a hair. All right. Monthly budget statement from the US, 89 billion. Previously minus 221 billion. Consensus was minus. So that's pretty damn good. That's a pretty good number there, I would assume. All right. I thought I seen Richmond Fed on there. No, I didn't. A little bit of trickery. So let's talk about CPI. What did I tell you guys last night? If you don't know, we trade live here Monday through Friday, 7:30 to 4. But first, if you don't know, I've been trading the markets for close to 10 years. I've been through quite a few different market cycles. I've had my ups and my downs. I've done some stupid things. I've done some really good things. I try my best on here to be able to show you guys and help be an example so that you guys have a person to look at that says this is a person that consistently makes money and makes it and has his losers way smaller. Baby, you got to give me 1 second, please, so that you guys can see the full potential you could bring out of yourselves. Understanding when things are happening and you're right, you want to put your foot on the pedal. At least I want to put my foot on the pedal, but I don't want to also be so blind that I don't take my foot off the pedal before it gets too late and I crash. Right? Take advantage while the good is getting, take advantage of when things are there, but also realize that does not continue to last forever. Maybe it lasts, but it may go somewhere else in a different sector or something changes, right? So being ahead of that is also a form of risk management. Sorry, I didn't want to wake my other half up. So, core inflation rate today. Again, thank you. Yo, Ricky, I'm looking at you right now, bro. You have not hit that like button. What should I do with him? Yeah, I'm talking. All right. Well, we're gonna worry about you in a minute. Let's help the people out to hit that like button. So, CPI. What did I say yesterday? I said If this number, we know the core or the headline number, which is the inflation rate month over month, was going to come in a bit hot. I thought it would come in around 0.5, you know, roughly. I thought we were going to come to that 0.5, 0.6. I brought you guys the chart of all the banks and their thoughts and their expectations of where they thought it was going to come in at. And they thought it was going to come in around 6.2, 6.5, 6.3, some 5.8, you know, so it was right around in that area. Core inflation rate is everything, your services excluding food and energy. Okay, this is important, and I literally told you guys, I said if you get a higher than expected inflation rate, the headline number, which is this one, it came in line. I said if it comes in line or it comes in at 0.7 and this drops below, because you got to think about it couple different ways here. I said if this comes in line and you get the core inflation rate to come in higher, that we're going to see downside. But what else did I say? I said if we get a 0.3 and the inflation rate, the headline number comes in right in line, but we come in at 0.3, I said I think we chop. I said I think we chop, but we chop to the downside. We chop to the downside because we still have data tomorrow that we're going to be more worried about, and I'm going to get why we're more worried about what's coming out tomorrow. And I don't think they know how big of a deal that this number is going to be because it's not highlighted in red on Investopedia. I said last night that if you get a 0.4, 0.5, also with the headline number, which is the regular inflation rate month over month, to come in at like a 0.7, you get a 0.7 with a 0.4. Even if you got this 0.6, you get a 0.4, 0.5, you're going to see the probability of a higher interest rate down, you know, coming up next meeting. It needed to be enough to cause the Fed to raise rates, right? It's not enough for the Fed to raise rates. But what the Fed is going to worry about, and what they are worried about, again, now I feel like they're focused on, well, they haven't done anything yet. So this is just, the CME reading is just a probability of where yields are trading, and that in turn tells you that what traders think the Fed is going to do. The Fed is probably in the lag effect right now. They're going to let things just play out for a while. Their job, price stability, which they've kind of gotten. They've gotten prices to be stable, stability, not go down or go up. They want it stable, and maximum employment. She keeps opening the door on me. She wants me to go out and give her more food and stuff, so I'm going to. But let me get into this, and then we're getting into charts. So we did exactly what I said. If this number came in at 0.6 and this came in at 0.4, 0.5, you'd have seen a bigger downside. If this came in at 0.7, 0.8, and this came in at a 0.2, you probably would have had, you know, it would have been a little bit different. So, I'm sorry to keep doing that. I didn't know she was going to do this to me, or I would have already, she was laying down. She seems to be doing a lot better, by the way. All right, she hopped in the window. All right, so that's what we got tomorrow, guys. Let's get through it. If you guys have questions, tickers, throw them in the chat, please. If you could. Yeah, we still worrying about Ricky not hitting that like button. I know he ain't. I know. ECB interest rate tomorrow. Yeah, he just did it. Yeah, he just. I appreciate you, bro. ECB interest rate decisions tomorrow. I'm going to want to focus on, I want to see what they do, but I'm going to focus on initial jobless claims. This is, CPI is kind of, I feel like pulling, like, our our shift is now on the jobs data, because that's also going to help CPI. We got to get to the meat and potatoes of demand. That is the labor market. Tomorrow you also have PPI. You most importantly also have retail sales. If you don't know, I've said it over and over and over again. The second equation to a recession. The first part is two quarters of negative GDP. If you get that, but you have a great economy, what's the second calculation? Retail sales, non-farm payroll, industrial production. Retail sales. I'm not saying we're going to have a recession or anything or just yet, right? I'm just saying retail sales is an important number. Previously 0.7, consensus 0.2, forecasting 0.4. If you get a negative number, this market will go up. We might be able to get that negative number. I think we might get a negative number, and if we do, watch out. This market might go higher. This market might go to 450, 449. If you get a higher than expected number, 0.2, 0.4, right? That's consensus and forecast. If we get a 0.6, 0.7, don't think we get a 0.8, but if we meet last month's 0.7, if not 0.8, and you're seeing retail sales go up, demand is rising. We don't want that. We're going down. Along with, because you got to remember, you get a lot of data points at one time. You're going to get PPI, retail sales. You're going to have ECB. That's the 15 minutes before, but PPI, retail sales, and then initial jobless claims. So last week, we got a better than expected number, and I told you guys about that last night. 216,000. We're expecting 221, 225 consensus. We gotta watch this initial jobless claims because this is the meat and bones of handling demand. Will the labor market soften? The Fed has said it themselves. They want and need this labor market to soften. That is the only way that they're going to get this inflation under control is if they soften the labor market. That's also going to, by softening the labor market, you're going to soften like the forecast for, or not forecast, everyone's pay, right? You've had rising wages. Sorry, that's where you've had rising wages still. You still have it. You've had UPS, GM, all these workers are still fighting for higher pay because of this inflation. And this is why inflation is so bad, because you get things like this. And then once the Fed tries to handle it, you get the slowdown and all these companies start paying more people more money. Then they got to lay more off to meet once things do cool off. Once the company stops making the money that they were making, they've increased everyone's pay. Now they're going to have to lay off more people, and the vicious cycle just goes and goes, right? It just goes. It's not fun, and it's not pretty. So maybe next time the government will think about what they do as far as monetary and physical policy, right? They'll probably think twice about the excessive amounts and the things that they do. At least I would hope, all right? We're still waiting for this story to end. I don't know how it's going to end. I really don't. I don't think the Fed does. And they don't care. They'll just keep raising rates with time, and they'll raise until things do soften, right? Whether it's too late, whatever. If they overdo it, okay. Jerome Powell has said, I got tools to fix that. All right? So, also, you guys want to watch this China industrial production and retail sales for China. This is going to be big. Their economy is still trying to get back to where it was before COVID as well. We thought with them shutting down that they would be able to, help the world out, would soften our blow a little bit. Well, things are just not good. Things aren't good. So the government is trying to do a whole bunch of different things to help with their real estate issues, to help get these people to spend money. Let's watch this data here. All right. This data is going to be important as well. And then Friday, you still have some more data, guys. You have import prices, export prices. These are going to be key numbers. New York Empire State Manufacturing Index. Okay. Industrial production. I just told you that's the other half, the other equation to recessionary calculations. You know, to understand whether or not you are in or heading to a recession. Michigan consumer sentiment. All right. So, do you understand why I think tomorrow, more importantly, tomorrow is the day? Please join us in chat. First off, hit that like button, subscribe, share it with your pretty sister, share it with your beautiful mother, share it with your father who's trying to do everything for you, share it to your cousins that's out there trying to make something of themselves, just trying to get somewhere further in life, right? Somebody who is sitting around bored as hell, send this to them so they can find something to do with their life. I don't care. Send it to a stranger. Hit that like button. I want to do something nice for you guys. There's I'm not going to aim small. I'm going to aim big. But guys, hit that fucking like button for me. We've had a great day in chat. I don't charge you guys a dime for any of my trade ideas or anything. Let's get into the charts, guys. I appreciate you. I appreciate you, Ricky, for hitting that like button, bro. So, and if you guys, right now is the time. If you guys have questions, you guys throw them in the throw tickers in the chat. Whatever it is you guys want to go over. Let's start with the trade of the day first, right? We shorted Amazon, right? Thank God we know how to manage risk, right? Thank God we know how to manage risk, and we do this the way it's supposed to be done. We had a great trade. I think I had it over 30-some%. Like, it was like almost 40%. And it took, that 40% was maybe, I don't know, 10 minutes, maybe. Let's go into Amazon. So we're going to talk with the SPY for real quick. Let's go into the SPY. So what do I think happens tomorrow with this data? So I just told you that if the employment number stays where it's at or comes down, retail sales also on top of it go up, okay? PPI goes up. You're going to see the market come down, right? That's all a sign that demand is still strong. The Fed might have to do more, all right? You want to keep an eye out on rates. Rates are going to be important because that's going to tell you where the market's going to go and do and what the market really thinks about it. You can watch currencies. You can pull up the CME Fed rate tool for the prediction, whatever. You can join us in chat. We're going to cover it. We're going to cover it live right here on this channel. So what is the downside target? Your downside target's going to be around 441. I think it's further, guys. I think you don't have real support until if you break this 443 level, guys, you don't have a real technical support level until you get down in this area, and it could be considered a lower high, right? 437, 436, 435, 437, right? But that's going to take a decent move. If we open and sell off where we're at today, that's a 2% move. Very doable by tomorrow and Friday if things get bad. If things, if the Fed gets a sour taste in their mouth with this data, watch out. So let's look at the chart. We just put in a lower high, right? We did find support right back at this previous double top. You're putting in lower highs, but we're stuck under the 50-day. This data today was not good enough to get us over that 50-day. Now the market can do three things. It can go up, it can go down, or it can chop sideways. Right? I don't mind if it stays in a range, but I like, it's got to have some meat on it. If we're sitting at 400 and we're hanging and we go up to 406, pull back, get long at 400, short at 406 until something changes. Right? It's not going to be perfect. It's going to be an area, right? The candles are getting a bit smaller. So I want to see if tomorrow we get some volatility and if that volatility is going to be to the upside or downside. The 20-day moving average, right? It hasn't really fooled with it lately, right? Making it support and resistance. It does like to, when the market is on a run, as you can see, it does like to make the 20-day moving average, right? It does like to make it support, as you can see, right? Resistance, resistance. Now we're back above it. What does it do? Does it start to roll? I feel like we're rolling over. It looks like we just put in 2 new lower highs, or 3 lower highs, you could call it. Okay, but that doesn't mean that we can't just sit here sideways and put in a base to make the second half of the year a leg higher. There's your high, there's the high, and there's the second high, if that's the case. It does kind of feel like to me that we did hold this level, which is important, right? So it's all going to be on the data. If this data comes out, jobless claims are on a rise, retail sales negative, PPI just comes in right around in line, you're going to see this market go higher, and we're going to go see if we can test. We're going to see if we can test 450, right? 449, 450. Let's see if we can get up to this level. That move, you need to know this ahead of time. If you don't know why, come join us. I'm here to help you guys. That's going to be about a 1% move. That's a 1% move. Very doable, right? Very doable. It's important to know those percentages because you can do so much with that percentage, right? That's going to help you with entries and exits, right? If this stuff, you got to be educated. You got to be taught how to do some of these things because you may not know how to use the percentage in a trade because it's important. It's really important. You need to know your ATRs. You need to know the relative volume, right? Because that way you're going to understand with the volume that you have, what is the percentage gain? What is the movement that you're going to get out of that trade, right? Or the day from the high to the low. What is it? What's it going to be on a really high volume day? And if it goes $10 and you've went 4, well, you should at least have another 4, $3.50 to $4 left, if not 5, right? So that'll help you say, hey, I'm not late. I can still take this trade and catch some movement here. If it hits my stop loss, it hits my stop loss. There's only so much you can do. You can control you can control your losses. You can't control how much you're going to make. That's the beautiful thing about this. This is why we have the best capital markets in the world, because we have some very smart people that have been able to do this successfully, and they continue to do this successfully, and it helps add liquidity. You got to understand the market. There is a bell. There is a bell there because it is for the notification to hit that like button and subscribe. You get notified when I come on. All right? If you could, share this. So you get a bell because this is a battle. This is a battle between whether it's you, the person on the Goldman Sachs, JP Morgan, Citi, family offices, right? Fiduciaries. So you have traders, you have buyers, you have net longs, net shorts, or long shorts. But where do you get your money from? You get it from taking it from someone else. You were right, they were wrong. Or at least in that time frame, you were right, and it's just another month before they're right. They're wrong right now, but that doesn't mean that position can't change and go green. But you go in, and when that position's going against someone, you're in there, you take your green trades, you're putting it in your pocket as it's hitting your targets, and then you're out, and you just rinse and repeat. All right, so the S&Ps, my thoughts are, we're going to watch the data to say, are we going to 449, or are we headed to 441, 440, 439? Where are we going? Right, where are we going? So 441.26 or 441.27 is the area that I have for minor support. You have some heavy support here at 443. That's the first target where I'm going to be, as we're going into that, if we have downside, I'm going to be taking profits into there. All right. I want to start seeing us get a nice volume bar tomorrow. Let's see if we get a nice volume bar tomorrow. All right, let's go into the news and everything. I don't want to take up too much time. If you guys could, please do me a favor and hit that like button. It's greatly appreciated. I did put out a sports video earlier, and it didn't turn out how I liked it. I got to work on it. It's a little sketchy. It's my first time doing it. We'll get better at it. Amazon. Do you understand the day that Amazon had today? I didn't hear anybody talking about it. Look at this candle. Look what it's done the past few days. Off of that 50-day. This thing just... It said, I'm done. I'm done hanging around the fucking 50-day. It keeps bringing me down. So I'm out of here. I'm leaving. And it left. And it left in a hurry. And whoever the hell was long this thing, clap it up. You just had a winning month. If not, the half of your year was just made on that trade. Somebody made a lot of money. Somebody out there made a lot of money longing Amazon, whether it was calls or the stock itself. That's a beautiful trade. You're talking a $10 move in 1, 2, 3, 4, 5 days. That's a big move for Amazon, guys. Just to put it in hindsight now, percentages are different on different names, right? 4% may not be much. Well, it'd be decent on Tesla. So that's a 9% move on Amazon. On Amazon. 9% in 1, 2, 3, 4, 5 days. 9%. I said it in chat today that when this thing broke back up above this area, that it's going to start squeezing. And it did. It did. I think I had the 1 minute chart up. So what did we do? Oh, this turquoise, I put a circle there because that was literally our entry at that time. So we literally, I didn't try, but I attempted to go short right here, or it's like right here at the bottom of here. And this is what really separated my trade from being green to really green. I didn't fully hit the button. So I was lucky enough to not get my order filled, right? And I was thinking to myself, let's see if we get a bounce back. Because at the time I was battling, when this happened, I knew we were headed to the day. I said it beforehand. And it just happened so quick in this 1 minute candle here, that the candle had already made its move as I had my orders up. And then it went down so fast and that premium was up. Like, it went. And the thing is I called it on this candle here. I called it. I'm like, guys, it's coming. Now's the time. Like, it's now or... I'm not saying it's now or never, but now's the time that we're getting that pullback in Amazon. I did not expect this day today. I don't know if it had to upgrade. I don't know if it had news. You also, please keep in mind, if you go trade something, make sure you know ahead of time whether it has an upgrade, downgrade, news, or something going on that you don't know about, because you could be on the wrong side of that trade and not know that there was a price upgrade, right? So the volume this morning was pretty, like, it wasn't heavy, but it was pretty heavy, right? This is a 1 minute, and I'm going to go back because I just want to more so focus on the trade itself right now. That I was like, this is why I took profits when I did, and I wasn't hanging around this trade. I was taking my money and I was leaving, right? Look at the volume this morning on this thing, right? You had really nice increase in volume. So what do you have here? This candle's important, right? Here's your initial morning high at 141, right? Right here's your initial morning high. Bang. You pulled back to VWAP, and what did you get? You got it in both of these candles, but that candle right there, you got a huge increase in volume to break that initial morning low or high. When you get a volume bar and a candle that looks like that, you see the length of that candle? When you get a candle like that to break the initial morning high, you guys already know what I'm going to say. This damn mouse. When you get, I want to make it big so you guys can see it right here. When you guys, even this, you can use this to the downside also. When you guys see, whether it's it doesn't matter what time frame either. I don't care if it's a 15-minute chart. If that stock's jumping around or just kind of sitting around and you get a big blast on that 15-minute chart, I don't care. An increase in volume through a high of day or low of day is usually 80% of the time. If it pulls back to this area, that area will hold. May not hold 100% of the time. 75 to 85% of the time, that level is going to hold, and you can use that as an entry. This is important, identifying this real time, because you don't have all this price action of it going up. So what are some of the tools that you can use other than time and sales and level 2 to help you know, hey, I want to be long this stock, and where do I want to be long it? We just had a huge increase in volume through the morning high. Where do I want to get long? Where can I get long? Well, other than your 9 EMA, VWAP, because with a candle like this, you may not get it. Now you're gapping way, you got this huge gap right here. You see this gap that you have here? All right, you see how far extended the stock is from this yellow line? That yellow line is the 9 EMA. This pink line is the VWAP. You also got to watch having pre-market and after hours on, because you're going to add more time to the moving averages, which is going to move them in, so, which I can show you at a later date. I've just go back in the other videos, I've talked about it. This is an important lesson. So, we had that. So, we got up to this level, and I'm going to bring up a 3-minute chart, because this is where we identified the short. Okay, this is where we identified this short here. But we had two things going on here. What do we have? We have two things going on. If I go to a 5-minute chart or even a 15-minute chart, you have this breakthrough, like this. Look at that mass. That's another massive day. Massive day consolidates. Massive day consolidates. Massive day. When you have institutions putting on positions, they cannot do it in one day. It may take them weeks. It may take them months. It could take them a year to get the full amount of position size that they want and where they want it. Right? They want to be buying under VWAP, but you have relative strength like this, guys, that you have institutional ownership at your back. Right? They're adding so much liquidity to this name. If you're on the same side in the same direction, I'm telling you right now, you're going to make your month. You could potentially make your month. But what we have here is a massive move higher in 3 days, right? This is a huge move for Amazon. And what you did is you just pulled back and consolidated, shook out the weak hands, and you held. There was let me go to a 15-minute chart. I know it was here, guys. I know it was here. I don't know if it was on the hourly chart or what. So my thought process, it may not have been this stock, but you kind of have a reverse head and shoulders there too, guys. You have a break and retest right here at this level, right? So what you have right here on the hourly chart, you see this candle right here? You see that? And then you see that? What you have is it breaking that initial high, and it breaks it on what? An increase in volume. And when it pulls back to it, look at all this volume right here. I'm looking right here, by the way. Sorry, I'm looking right here. Look at all that volume. I wanted to be able to bring it up for you, but you could just take my word for it. It's an increase in volume. You broke above it on an increase in volume. And now what do? You're making this pivot high support. You tail down to it. I don't know if you can see that tail. See that tail right there? And if I pan it out, let me so what I noticed was that break on that, and you got the break and the pullback to that pivot high, and that's when I noticed, okay, that's actually could be a nice long. That's actually a really nice long. It's pulled back, and we'll see. So you had just that. You had an increase in volume on the break through that previous high, and then you had it hold it as support. It pulls back, holds it as support. So what I was looking at was the weekly and daily, right? You had an area here that was massive resistance. It's massive resistance, resistance, resistance. Well, it did break it today. So when I seen us pull up to this area, and I bring up, like, I don't know, a 30-minute chart, right? I'm like, look at this. We got, you had so much. I forget what I brought up. It might have been the 4-hour, right? In real time, members will tell you what I brought up if you want, or what that we did bring this up. There's a reason why we went short here, right? There's a reason why we shorted here. What was our short? We literally top ticked this thing, guys. We literally just about top ticked it. I called it out before the move happened. I called it out when the move was getting ready to happen. So I said, hey, if you want to short Amazon, the time is now. The time is now. And literally the time was then. So I started getting my position ready as I'm seeing this candle here, and I'm getting, through time and sales level 2, everything, I feel it. I can't explain it. I feel it. And I'm like, it's coming. So I start getting ready. Boom, it falls out of bed. I'm like, shit. It didn't fall out of bed, but you know what I mean. That's a decent candle with a little bit of volume behind it. And I'm looking at the volume. I'm like, okay, so now does the selling start stepping in? Because we've already rejected up here. Rejection. Look at all these tails. So I tried to enter. It was like down here. Because I said, this thing's just going to fall. And I know I'm at least aiming. I'm taking a piece off at 142. And then I'm going to look for 141 to be the final take profit. It didn't get to 141. Why was 141 my target? Well, 141.22. That's back at that previous high that I thought you could pull back to test that level again. But what happened was you sold off to a point where the shorts, just like myself, we were taking profits, right? You got this extension. It pulls back to VWAP, pretty much a double top rate of VWAP. You get one last extension, and then things change. But what also changes, guys? Look at your RSI and look at your MACD. Look at the MACD also. That's this. This is MACD, moving average convergence divergence, and your RSI. Look how low this RSI is. Look how low your MACD is, and it's also trying to curl itself up. This is also another reason why I took profits when I did, because look, this is where I took profits. Look how low the RSI was. I said, I just got a nice move to the downside. That pullback with being in weekly options, it could possibly erase everything that I made. So you need to use all of these tools to help you make your decisions on when to enter and when to exit. I probably don't have much more out of this trade with the RSI being so low. MACD's just like, not just, I don't know. I had 40% on top of everything else. Why would I let that go? Why? This thing could pop back up. My thoughts were maybe it pops back up to 142.50 and we get a second entry. The market, the SPY and Qs aren't selling off. CPI wasn't that bad. It wasn't bad enough for the Fed to raise rates. So why would I expect Amazon to sell off in a heavy way? Right? I wasn't. I was just looking for a trade, a base hit, a double that might turn into a triple or a home run. I don't know. We'll find out when I get there, when that time comes. We took the trade. Members got 50, 60, 70, 80%. Right here. I swear, right on that wick, as it's going up to the 9 EMA, I entered. I was very lucky that I did that. When I pressed the button, I didn't press it hard enough to get in here, because that separation right there from here to here was about 8 cents, 10 cents. Right? It's a decent amount, depending on where it is that you're getting in, or, what options you're using, or if you're short. Shorting's obviously not going to, you're not too worried about that, but you do want to get the best price you can. So our entry was perfect here. Took profits at VWAP. My first profit We got the extension right here. It bounced up. What I held, bang, right there. I took profits right there. It's a support area. I took my first piece off down here at 142. I said I'm looking for VWAP. Looking for VWAP low 142. That was my major piece. Got a little crack through VWAP. I think I was the last piece was like at 142, just about even. Yeah, 142. I told members in chat there's still a little meat on the bone. Don't enter it. I wouldn't enter it. But after I got out, there was still a little bit of meat. I did not expect this. But I did say when it started to happen, I said, guys, shorts are done. And this thing is putting in so... I called it here, guys. I said, that's it. I don't think about getting short. Because now it's going to go back. I thought it was going to go back to 142.50. And then maybe just sit there and pull back to VWAP. When I got the confirmation that look at this candle going through VWAP. Shorts are really getting out. Now you got shorts that might have been long-term shorts prior. They're really getting out now. Like this thing's going up, right? They're seeing that candle, and look what happened after that candle. You got these huge candles. Look at this one, and then what happened with these two? This huge breakthrough VWAP didn't even pull back to retest it because with the size of the candle like that, you're probably going to get an extension. You're going to get a relative strength type of movement. Look at this candle. They seen this and they said they're done. They're out. They're really out because if they got short up here, they are not. They know chances are we just went from that pullback all the way back up to that level in this amount of time. They're out. They're covering. Let's go look at where the Fibonacci retracement would be, which I can tell you without pulling it up where it would be. I've been doing this for so long. I know where things are. So if I were to measure this move here, I'm going to say this is your 32 fib here from the low, roughly. Yeah, I was also thinking 23 fib, but I thought it might be a little too far for it. So, oh no, right here, guys. I'm sorry. This is what we're measuring. I'm sorry. So that's about 50% retracement there. So yeah, 61. Right? That's a 61% retracement right here. From the low. So, and you see how the moving average has changed now? You see how they've changed? So, moral of the story. Understand and find your trader identity. Because if you don't, you're going to continue to lose money. Having a game plan and a full understanding of how to trade the markets to be consistently profitable. It's so important. If you're not going to work on it and go back over trades and literally write a diary because you need to know how are you feeling that day. Did you just find this thing and you were not prepared for it in the morning? You scanned it for about 2-3 minutes and took the trade, and how did it work out? Were you not prepared to trade this that day? All right, so longer term, this thing, I feel like you're going to get a pullback. So that was Amazon. That was one of our trades today. That was the winner of the day. And what I also want you to notice is this, and I called it out in chat, which is the line I deleted. Look at this failed breakdown on the bull flag. Look at that. There's a bull flag. Did you guys see that? Right here. Look at that. And there is your flag. And this is the pole. Right there. Boom. It broke down. And usually you'll get a test. What will it test? It'll test that uptrend line. This trend line, it'll break out of it. It'll pull back to it. And reaffirm if them sellers if they still are sellers, they're going to jump back in because they've got their second opportunity. Well, nope. That's a failed breakdown, and that is what caused that move there. Really nice done. And, a couple of members looked back and were like, oh, it's 80, 90, 100%, whatever it was. I don't remember off the top of my head. Well, guess what? I said, guys, that's hindsight. We got a winning trade. Just let's move on to the next one. Right? You're managing risk. We don't know where this thing's going to go. You don't. You know, you would have thought you would have thought that it would have went to pre-market lows. It broke through pre-market highs, I mean, and pulled back to us. So she's wanting to eat. Baby, I'm coming. I know you're hungry. I'm coming. So Amazon, that was a trade of the day. Starbucks. I'm going to be trading Netflix and Starbucks tomorrow. Starbucks, you had BP CEO step down. Now you got Starbucks. What's his name? I forget his name. He's stepping down. Starbucks. More importantly, Netflix. They said that they're having trouble, or he just had some comments that a CEO should never comment. I feel like they did it because they want the stock price to go lower so they could possibly buy more into a stock buyback, but they want to do it at a cheaper price. So how do you do it? You talk the stock down. So this thing could pull itself back to 365. Will it get there? Maybe. What am I looking for? I'm looking for like the 370 area, the low 370s for this. I'm going to make it bigger for you. I'm coming, Turkey Daddy. Going to feed you. Netflix, I will be trading it tomorrow. Okay? I will be looking for a full move. You have a gap fill here. There is a gap fill. Right? Tomorrow, I want to look for a bounce back. I want to look for a bounce back to get short. See if we come in with a gap down. Again, the thing is also you have data, so that may coincide with this whole trade. You may have data that may mess with this trade a little bit. All right. You're at a major support level right here. This level here I'm watching because it's a major support level, and if it does decide that, you know, it can't break up above it, that's one area that I want to be short. That's just one area, right? You have a previous small support area up here. But if we can get that bounce back, I want to see the first target would be 399, 391, right? That's a previous support area. It's like down 390, 400, 399. If you break through that, you're talking about the gap fill, which is ultimately where I'd like to see Netflix get to. All right. And I'm going to look for Netflix to get back down to, call it the gap fill. You have a double top there. But you don't have much price action there, though. That's the key. You have nothing here. Even with the gap fill, you have nothing here. Like, you don't have a pullback, support, resistance, support. Like, you don't have a consolidation to put the market where the market put its foot in the ground to go higher, right? So I'm going to look for this area because you want to really bring in buyers. Where would you bring in buyers? You probably start bringing them in right around this. I thought it was like 365, but we're going to call it right here at 380. 380 is going to be the final level. If it gets there, it may take a week or two. It may take about a week, sometime next week. That's the live stream, guys. Ricky, I thought he liked it. Hit that like button for me, guys. If you could, share this stream. I have content that I want to help you guys make money. I don't ask you guys for anything. Please consider hitting that like button and subscribing, right? Come join us tomorrow, 7:30, if not earlier. We're going to be live trading in chat, coming up with our game plans. Looking for another wonderful, beautiful day. Come in, make your money, go about your day. Let's do it, guys. You guys have a great night. I'll see you guys in the morning. Hit that like button and subscribe. Thank you.